Good morning, good evening, good afternoon. Trader Steve here at Logic FX Trading, and welcome to another one of our news and reviews videos. I'm going to try to do a couple of these a week, guys. At the moment, I'm not getting them in because I'm too busy training people. But, once you get in a routine, you're fine. So we'll try and get at least one in a week. Today, we're going to be looking at, there are two major things at the moment I want to look at. But today, I'm going to focus specifically on the world economy. And tomorrow, I think, or over the weekend, this is a Friday, so over the weekend, I'll take another look at Brexit, guys, because there seems to be a very positive mood coming out of the UK so far as the Brexit talks are concerned. So we'll have a look at that separately. Let's start with this idea about the global economy. And before we look at the news stories, let's just take a review of where we are and what things are looking like. Now, the way we take advantage of understanding what's happening in the world economy is that we can trade indexes. Obviously, this is the Dow Jones index, or you can trade individual shares. Now, obviously, if the index is going in that direction, there'll be some shares that will have a better movement than the index, and some won't be as good. So we'll concentrate on the index, and then from that, you can do your own analysis of each individual company and see if there's anything there that you fancy. Before we do anything, let me just go out a little bit. We'll go out to the daily time scale. And by the way, we called that, or I called that, I say we, I don't know why, it's the royal we. I called that, guys. Right, so we go right back, and this is way back to 1984. The stock market was running along at that. Now, obviously, if you zoom in on that, there's big moves within that, guys. It was a sideways movement, so it's very tradable. But compared to where it ended up going, that looks like a flat line, okay? So what happened? We had this push up from the 80s up into the end of the 90s, and then we had a correction. Now that for me is a whole correction. I'll explain to you in a minute the reason why I think it's a whole correction. So for me, that's a first wave coming up. That's a second wave. If we're going to talk about Elliott, and this is a third wave, guys. Within that third wave, we potentially have a 1, 2, 3, 4, and a 5. And then we started to get a correction. Now, the big thing with the correction is, if we go back down to, let's take it to the daily. This was 2017. Everybody made loads of money in 2017, guys. 2018 was a different story. This was the start of 2018 that continued on up, and then bang. We had this pullback, then it climbed back up. And when it got to here around a double top, I started to say, guys, this is going to come down. It'll break that low to give us an A. Oops, sorry, that's the wrong thing I've used there. Give us an A, B, C flat correction. And that's what we've had. That big move there was Christmas Eve. And since then, prices have climbed back up. What I'm looking for at the moment is a pullback for two reasons. First of all, we know that price, even if it's going to go up, it goes up in a sawtooth manner. So we need some sort of pullback. If you're not already in that, you need a pullback before you can get in to go long. But the other thing is this, guys, is this correction over? Now, we'll look at the news stories in a moment for clues about that. But we're just looking at from an Elliott wave structure analysis point of view, guys. For me, that correction, even though it's a lovely big correction, it's only corrected that last wave. It's only corrected that fifth wave. It hasn't corrected the whole move up. We'll need to go back out to see what I'm talking about. From there to there, that's the only correction we've had in it, guys. And given that it looks like a 5-wave impulse, and given how fast that came up, surely it needs to at least correct back to that trend line and maybe even deeper. If we take a fib, it's only come back down to the 23.6, guys. As we know, it doesn't have to necessarily come deeper, but it may certainly go sideways, guys, rather than pushing on up. I suspect that it will do that. Now, remember, we're on a 4-day time scale here. So even if it did that, there's going to be a lot of opportunities to trade short, to trade long, to trade short, to trade long. And when we get over here, which could take the rest of the year, maybe even into next year, we'll be through the slowdown, and then prices will start to go. Now, it's speculation at the moment, guys. But at the end of the day, we have to gather information up based on the fundamentals and our analysis of Elliott Wave to give ourselves an idea of what we're looking for on the lower time scale and where we should find trading opportunities. So let's go back down to the, let's not go to 1 hour, let's go to the 4 hour. So within that, what I'm saying is there's a pretty high probability that this, or around here, it could reach the top. I don't think it's going to reach the top, but it could reach the top and then start to come back down again, guys, given there's a sideways movement. And when it gets down to here, it could go back up, but it could go down. You've seen this before on a smaller time scale. You can see it all over the place where price comes up and then the market is buying time. It's called a complex correction. It's going sideways. It's buying time as opposed to a complex correction that is trying to pull price back down. So price doesn't necessarily have to come back down steeply. It could just stay in this back and forwards movement, guys. That's what's, I think that's the more likely scenario rather than this going deep. You know, obviously it could potentially give us one of those, a deep move down. But so far, all we've had is an ABC correction, guys. I suspect this complex correction isn't over. At the moment, it's a, you know, on the this 4 hour time scale looks like a simple correction, but it could turn into something quite complex. So that's where we are. If we go and look at the S&P, it's more or less the same thing. We had an expanded flat on the S&P yet again. We called that as well. There was our line. There was our initial target. When we were up here, that was the target we put in. We said we're going to come down. Price came down, broke down through, as you would expect, with a flat correction. This is potentially a expanded flat correction. We've had the push up, guys. It's come into these sorts of levels. Not that we trade levels, but from a structural point of view, it could potentially come back down here. Therefore, what I'm looking for is a pullback. So how do you know? Let's say the pullback happens. How do you know whether it's a good trade to go short or not? Well, that will be determined by what the correction looks like, guys. Let's zoom in a little bit. We haven't even got on their fundamental news here yet, guys, but I think this is a big story, so we need to spend a little bit of time on it. Okay, that may well be the start of it, but given the way it's been going, that could easily go up for one more before it starts, but we will get a correction of that whole move, guys, at some point. So back to answer the question, how do we know whether it's going to come down here or whether it's just going to be a correction of that before it moves on up? Well, there's several things we look at. First of all, we're looking at the news every single day. We're looking at what the big banks, the big trading houses, investment banks are basically saying, what their opinion of the world economy is. And then over and above that is there's the structure. If this were to drop in this sort of manner, the chances are it's just a correction of that and we're looking to trade it long. But if it starts to drop more sharply and gives us a pullback in the opposite direction, then there's a possibility, and maybe even turns into a probability, that prices are coming back down into these levels, guys. We're not calling either of them yet. What we do from here is we start to look for evidence. Okay, so what's the evidence? let's go. This is my Flipboard, and you can get access to this either just by going into Flipboard and looking up Logic FX Trading, or from the front page, the home page of the Logic FX Trading website. That's the home page there. Down at the bottom here, if you go to there and you click on that, it'll bring you over to my Flipboard magazine. I put 2 or 3 new news stories in there each day. We also put in any charts that I've put out on TradingView, any little videos, and including this video will be put in there, guys. So it's a good wee thing to keep your eye on. So what are we looking at? There's a couple of things here. This one says world shares rise in hopes that the US-China breakthrough. Okay. Prior to this, we've been looking at a world slowdown. All the numbers are saying the world economy is slowing down. The Chinese economy is slowing down. It's still growing, guys, but not at the rates that it has been. The European economy is stagnant, possibly going into recession. Italy's in recession. Germany's possibly going into recession. The UK's in Brexit. So it's not going to be growing very fast. Even if they get a deal, it's not necessarily going to be, you know, taking off anywhere. If there isn't a deal on Brexit, the UK's economy will go into recession. So Europe's looking certainly as a slowdown, possibly a recession. Japan's going sideways, guys. It's going nowhere. They can't even get their inflation up to 2%. The US is doing okay, guys. So a deal between the US and China could slow down turn a possible recession into a slowdown. Whereas a no deal between them, if the US decides to put tariffs on, then we could see a world recession, guys. So either of those two, going back to our chart there, the talk of a slowdown and possible recession, neither of those sound like this wants to do that. Both of them sound a slowdown could make it go sideways, as we were talking about. Still tradable, but it's sideways over towards that previous trend line. A recession, in other words, no deal between China and the US, where the US puts massive tariffs on Chinese goods. You could see this coming down in a very sharp manner, maybe even breaking out the bottom there, guys. So we need to keep an eye on what's going on there. Either way, I'm looking for a pullback. Okay, we're looking for a pullback. Now, having said that, here's another story that I've put out. Global economy may have already bottomed out, says Goldman Sachs. Now we go over and we look at that. There we go. There's the news story. And it's an opinion, guys. It's an opinion. They're seeing some green shoots are emerging that suggest that sequential growth will pick up from here. That's what they're saying. Goldman remains positive on risk assets, although upside is now probably lower as markets have become more sanguine on recession. In other words, they're looking more at a slowdown rather than a recession. This doesn't mean everyone's looking for massive growth at the moment, guys. I think we need to buy a bit of time. They expect bond yields to rise, maintains a bearish dollar view. That's important for us, not from a point of view of the indexes, but point of view of your dollar trades, guys. Given the dovish Fed, an expectation for a pickup in global growth is modestly bullish on oil over the next 2 to 3 months, but sees a more bearish outlook for the remainder of the year. Now, I think that's referring to oil, bullish and then bearish. Now, I don't know how they could be bearish in oil if they're expecting the economy to grow. So that's a bit of an anomaly there. The case for a pickup from the current pace is strongest in the US. As the drag from tightening of fiscal conditions eases, that's because the Fed's not going to continue to hike interest rates, guys. They see tentative signs of a turnaround in Chinese growth. And then they go on to say, we're prepared for a recession. We're not predicting a recession. They're trying to reassure their investors there, guys. Goldman reckons Europe looks like the weakest major region, with Italy in recession, Germany close to it, and most other economies growing at only about trend pace. And as for the Fed, Goldman says prospects for moves in the next 6 to 9 months have fallen, and an increase towards the end of the year would require a rebound in both growth and core inflation. It expects announcements in March, meaning the Fed will end the balance sheets runoff later in the year, probably in September. So we're not expecting any movement up in the dollar going into this year. Okay, so what does all that mean? That was a little bit contradictory to what we were saying. They're talking green shoots, but they're also preparing for a recession. That all sounds sideways to me, guys. That sounds sideways. So I sincerely think that we're going to get a sideways movement. So what are we looking for? We're looking for a pullback here and potentially a move further down. You wait, let me clean that up for you. And remember, this will be reflected also in the Dow Jones. And purely from a technical point of view, guys, when you get a move like that, you're going to have at least a correction, into that sort of area. So it could well be worth getting involved in. Wait for the pullback before you try and get into it. If you jump in here, guys, it can come down, pull back up, give you a double top, potentially take you out, and then it will go. So wait for it to come back, pull back up, and then on the second move down, which would be your third wave, that's where you get involved. How does that look? Earlier, when we were looking at this, that would have been our trend line. We wait for the breakout. We wait for the pullback, and there's where you get in. Okay. So it's the same in the other way around. Here, we're looking for the breakout. We wait for the pullback. There's where you get in, guys. Okay, I hope that helps. And I'll follow up with another one over the weekend about Brexit and see how that's going. If we look at the UK index at the minute, we're looking for a breakout of this. Obviously, the timing's all important, because if you get in too early, it comes up, drops again, comes up, drops again, and then it goes, guys. So yet again, if you want into this, you wait for the break, you wait for a pullback on a smaller time scale, and then off it goes. Okay, so that's what we're looking for in the UK. The rest of them, we're looking for them to break and start to come down. Why are we looking for that on the UK? Basically because if there's a Brexit deal, they'll get a bonus. All of the UK companies are undervalued because of Brexit. The pound's undervalued because of Brexit. This is what we're going to talk about tomorrow, guys. But there you can see from today's trading room, that's basically what I was saying to my traders. Guys, we're looking for the pound to go up. Okay, that'll do us for today. Speak to you all again soon. Bye for now.